I want to give you on this Wednesday morning Legal AF a preview of what's going to happen on Friday in Jackson Hole, Wyoming, when more than 40 central bankers, led by Jay Powell, our central banker for the Federal Reserve, get together for a 3-day conference. Don't be fooled by the title. Labor Markets and Transition. What everybody's waiting on is the Friday speech, the address to his fellow central bankers by Jay Powell about interest rates and what he's going to do. Is it going to be a middle finger to the Trump administration? Is he going to hold rates steady? Is he going to go as far as to validate what the market thinks is going to be a 0.5 point interest rate cut? Why does it matter? Because monetary policy, being headed by an independent banker, is the bulwark against the out-of-control economic policies of Donald Trump. We can't allow Donald Trump to bully his way into controlling monetary policy, the supply of money, the interest rates of this country. At the same time, he controls fiscal policy, which is his economic policies, such as they are, including tariffs, and let him try to control the statistics and the indexes and the metrics to measure his own economy. We can't let him get all three. And Jay Powell's speech on Friday is going to go a long way to telling us what kind of country and economy we have going forward. I'm Michael Popok. You're on Legal AF Wednesday morning, so it must be about Trumponomics. Sometimes these conferences sort of slip under the radar, but I didn't want it to because I think it's very, very important to talk about Jay Powell. Now, he's been bashed, he's been beaten, he's been burned, he's been dragged through the streets and everything else by Donald Trump and his administration, including Scott Bessent, the Treasury Secretary. When the Treasury Secretary isn't bored taking out the Internal Revenue Service Commissioner after a month and sending him packing, he's been bashing Jay Powell. Now, Jay Powell's not going anywhere till the 26th of May. That's when his term as chair of the Federal Reserve is over. The markets want it that way. The bond rating agencies want it that way. The financial services companies want it that way. The big banks like Goldman Sachs and Chase, they want it that way. Now, Donald Trump wants lower interest rates. I've seen Scott Bessent go on television and the Treasury Secretary and say things like interest rates should be cut in half. I've seen the models that say they should be cut in half. I've seen the models. Scott, I've seen the models that say they should be doubled, or they should at least go up another 25%. And what is the sticking point? The sticking point is Donald Trump's weak job numbers. Doesn't matter how many commissioners of the Bureau of Labor Statistics you fire, your numbers are still in the toilet for jobs. You have weakening job creation. That's the labor market. And you've got increased pricing, and they're not stopping. They're rising. It's like watching bread bake. They just keep going up. The prices go up under Trump and up and up and up and up and up. Why? Because his tariffs that he imposes without regard, totally without rhyme or reason, both what's called reciprocal tariffs, which are against countries, and sectorial tariffs, which are against sectors like aluminum and steel and copper and plastic and different things. Those two things combined are catching the logistical shipping companies, merchants, and brokers with their pants down. And that's screwing up pricing as well. Consumer price index is already up 3% from last year and even higher for certain things. Fruits and vegetables up 45%. That's not a typo. 45% since Donald Trump's been in power. And so prices are not just inching up, they're rocketing up. And they're getting worse because economists like the ones at Goldman Sachs have said that in the beginning, since April, May, June, let's say first quarter, after he announced, the quarter after he announced his tariffs in April, Trump, that a lot of the other people along the supply chain ate it before it got to the consumer. There was burden sharing. They took the bulk of the extra tariffs and didn't pass it on to consumers. But now it's being passed on to consumers. There's an estimate that up to 1/4 of the tariffs are now being passed on to consumers, meaning prices go up, and that up to 70% in the next quarter or so will be priced in and going to the consumer and paid by the consumer. That's what we always said. The tariffs are going to be paid by the consumers. They're not going to be eaten by the bottom line of businesses. So you've got the tariff consumer price index weakness, wholesale price weakness, job weakness, and inflation up. Now, the target rate of inflation for the Federal Reserve is 2%, meaning inflation at 2%. It's now at 3.2%, and it's probably the real inflation of what you're feeling is higher than 4%. That's double what the Fed wants. So why would they cut interest rates? Donald Trump's begging them to, because cheaper money, more cash means more fuel for him to burn, more stimulus for him to burn, to wallpaper over his failed economic policies. So this meeting in Jackson Hole, which dates back to the 1980s, where 40 J. Powells get together from various countries, from all major companies, get together and talk. And what all eyes are on J. Powell's Friday speech about interest rates. All eyes are right here now on Legal AF and on me on Wednesday morning. Take a minute, hit the free subscribe button. I'm going to tell you more about Legal AF Substack at the end as well, and the other way to support this kind of content. So the market believes that even though the Fed, in a 9-3 decision or 8-2 decision, decided not to lower interest rates at the last go around last month, everybody believes the September meeting will lead to a rate cut. And they're already pricing in, they've already baked in a 0.5 point decrease in the interest rates, 0.5 point. So they're at 4, let's say 4.25 now. They're thinking it's going to go down 0.5 point. I'm not sure it goes down 0.5 point. First of all, that's a huge decrease. It's a huge decrease. Scott Bessent, the Treasury Secretary, wants him to cut in half. That's not happening either. Could it go from 4.25 to 4? Maybe. 4.5 to 4.25? Maybe. And that's the rate that banks charge each other. Now, that's not the rate you and I pay for consumer loans, car loans, credit card debt, mortgages, student loans. That's different. That's based on your credit rating, and they got to make a profit too. So it's 2, 3, 4, 5, 10 points over, depending upon your credit rating, over that rate. That when we talk interest rate, that's what we're talking about. So it's going to be very interesting to see what Jay Powell does and says. Now, he's got access to data that you and I don't have. I mean, reams of data. I mean, there are 2,000 economists that work, and statisticians and staffers that work in the Federal Reserve. And that's in the main headquarters. That's in three full buildings worth of people. And that's all they think about. And that's all they look at. And that's what the Board of Governors, 13 members of the Board of Governors. Right now there's 2 Trumpers on there, soon to be 3 Trumpers on there. But still there's 8 or 9 people, including Jay Powell, that are not Trumpers. And they're looking at this data. And they're not firing people for giving accurate data like Donald Trump. They're not trying to fudge the numbers or cook the books. They're not MAGA. They're bipartisan. They're leaders. And that's what galls Donald Trump is he has no control over them. That's what we want. We want no control over them. The polling says no control over the Federal Reserve is what the American people want by a large number, like 75, 80%. And Jay Powell knows that. So he's doing what he needs to do. If I had to make a prediction, I think he'll signal there'll be a small rate cut, or that he's going to keep it steady for one more. If he thinks he's got the votes in terms of the Board of Governors, he's going to keep it steady for one more round, because he's going to point to inflation up. He's going to point to consumer price index up, wholesale prices up, jobs down, and stagflation around the corner. He's trying to manage our economy. He gets his cards dealt to him by other countries and their economy and decisions that they make, and those decisions that are made by Donald Trump. And then he's dealt those cards, and he has to play those cards. And that's all we can ask him to do as the only adult in the room to protect our economy. I'll give you an example of something that he has to deal with right now. Just yesterday, Donald Trump imposed sectorial tariffs on steel and aluminum that affect over 400 items that are in your household, including baby goods, including electronics, including motorcycles, including furniture. Anything that's shiny and metal just got a tariff placed on it. And it was so surprising that it actually, according to insiders, stunned the logistics industry. Now, that's a hard-boiled industry that deals with the supply chain and shipping from countries to countries. So if you're going to catch them flat-footed and stunned, you're going to flummox them, it must be pretty substantial. And they are also flummoxed because of the way they learned about it. Border Patrol, Customs and Border Patrol issued a memo They were like, what? And there were no exceptions because they're idiots in the Trump administration for goods already in transit. So now they got to collect. They've already shipped. They've already made their business decisions. They've already figured out their profit model. And now the thing that's in shipment just got hit with another sectorial tariff by Donald Trump out of the blue. And where do you think all that's going to end up? In consumer pricing. This is not helping. This is not helping Federal Reserve Chairman Jay Powell make his decision about interest rates or the speech he's going to give. I'm sure he's rewriting it as we speak in Jackson Hole on Friday, which I'll report on and show clips from. And that's our problem. We have a mad president who's an economic imbecile, who's got economic immaturity, lack of maturity, and Jay Powell and financial services and the rest of the world have to pick up the pieces behind him. So I'm going to continue to follow this Trumponomics every day, first video every day here on Legal AF. Now take a moment and hit the subscribe button here, because we'll get to this 900,000 in the next month or so with your help. And then come over to Legal AF Substack, where I post live reports every day. We're doing 1 or 2 lives a day, 8 to 10 minutes at a time, pull everybody together, talk to them at Legal AF Substack. We got writing, my morning AF, which is my report of what is important, I think will be important to our audience, posting of filings and orders in courts, all on Legal AF Substack. We're now number 10 in U.S. politics on all of Substack. That's all because of you. And we could use help with paid subscriptions to Legal AF Substack. It's about $7, $8 a month. And we have amazing content you can't find anywhere else. Legal AF Substack, folks. Until my next report, I'm Michael Popok. I'm Michael Popok, and I got some big news for our audience. Most of you know me as the co-founder of Midas Touches Legal AF and the Legal AF YouTube channel, or as a 35-year national trial lawyer. Now, building on what we started together on Legal AF, I've launched a new law firm, the Popok Firm, dedicated to obtaining justice through compassionate and zealous legal representation. At the Popok Firm, we are focused on obtaining justice for those who have been injured or damaged by a life-altering event by securing the highest dollar recoveries. I've been tirelessly fighting for justice for the last 35 years, so my own law firm organically building on my Legal AF work just feels right. And I've handpicked a team of top-tier trial fighters and settlement experts throughout all 50 states known as big auto injury attorneys who have the know-how to beat heartless insurance companies, corporations, government entities, and their attorneys. Big Auto's attorneys working with my firm are rock stars in their respective states and collectively responsible for billions of dollars in recoveries. So if you or a loved one have been on the wrong side of a catastrophic auto, motor vehicle, rideshare, or truck accident, suffered a personal injury, or been the victim of medical malpractice, employment harassment or discrimination, or suffered a violation of your civil and constitutional rights, then contact the Popok Firm today at 1-877-POPOK-AF or by visiting my website at www.thepopokfirm.com and fill out a free case evaluation form. And if we determine that you have a case and you sign with us, we don't get paid unless you do. The Popok Firm, fighting for your justice every step of the way.